Thank you so much for joining us today, and continuing with our series of the survival strategy for startups. We have two renowned personalities with us today. If given a chance, both of them have the ability to talk on and on and on about the Chinese and the Southeast tech startup ecosystem. Interestingly, none of them belong to China or any Southeast Asian country, but they have so much of knowledge. They have spent so much of time in these ecosystems that I'm sure we will have a lot to learn from them. Uh, so, uh, so I'll introduce both the speakers. First, we have Karina Bellin. Karina is co-founder of W Hub, which is an ecosystem platform, a corporate innovation program in Hong Kong. 2 years back, she co-founded one of the angel network in Hong Kong, which is not just investing in GBA region, but also actively looking for investments in Indian startups. The other speaker we have today is William. William is general partner at SOSV, the Accelerator VC fund with more than 700 million US dollars asset under management. William also holds managing director position at China Accelerator, which is SOSV's cross-border internet accelerator, and also managing director of MOX, the mobile-only accelerator, which gives apps and mobile platform free user acquisition in India, Indonesia, and Southeast Asia and South Asia. So over to I'll pass on the mic to the speakers. So maybe we can start with Karina, and then okay. So it's Williams. So let's
Yes.
start with
Okay.
Williams in that case. Okay. So it's up to you. Whoever wants to go first, I leave it up to you.
Karina, you want to go first?
Yeah, sure. I can go first. Thank you. Just when you said Karina, actually, I was getting disconnected because I think I was tapping. Actually, I love your cup talking about swag. I can see on the chat group that people are really getting that well. So. I do have some happy t-shirts as well. So. Okay, great, fantastic. So I'll just prepared actually, a couple of slides just to walk you through and to make it a little bit more interactive and maybe nice and easy to follow. So I'm super thrilled to be with you guys online. I'm regularly in India, and I totally missed it. Last time was the 31st of January. I remember that because we had the finale of our global startup competition in Bangalore. And since then, I couldn't make it back. But at least great to be connected digitally with all of you guys. And as Sunil mentioned, I'm a co-founder of W Hub and Angel Hub. And we're specialized basically in sourcing, financing, and scaling of tech companies that have chosen to operate in Asia. So they do not necessarily have to be coming originally here from Asia, but are here to scale in this part of the world. And we live by this mantra of backing entrepreneurs by leveraging really the power of the entire community of the startup ecosystem, but a little bit more to that later. The mission and passion that we have across both platforms, W Hub and Angel Hub, is that we really believe that startups are driving innovation and economic growth. And so we're really here with W Hub to be that power connector to unleash you startups, you founders, to reach your full potential. And we set out with that mission on bringing basically Hong Kong and now what we call the Greater Bay Area on the global map of startup ecosystems. And on Angel Hub, basically it is the mission of helping startups to tackle one specific problem, which is getting access to funding, but at the same time also creating a new asset class for high net worth individuals and democratizing access into startup investing. And so we're with that Hong Kong's very first and still only SFC regulated equity crowdfunding platform for professional investors and then growth stage companies scaling in Asia. So SFC is our regulator here, the Securities and Futures Commission. So I thought I'll actually give you a little bit more of color on Hong Kong. So I said we set out with this mission on bringing Hong Kong on the global map of ecosystems. And then several years down the line, we're actually pretty proud how far the ecosystem has come. And if we look at it, they have given birth to 9 unicorns, which probably makes us or brings us one of the highest ranks when we talk about unicorns per capita, because we're only 7 million people here in Hong Kong. One of these unicorns, as you can see, and I will talk about that again later on, the diversity of unicorns is pretty interesting, even in terms of sectors. So it's not only about fintech. So we do have WeLab, BitMax, and Airwallex and TNG. These are all fintech companies. But we also have with Klook, a very successful travel tech company, with Lala Move and GoGoVan, basically the Uber for logistics, so in the logistics space. And then SenseTime is really, really interesting because it's a company founded here out of Chinese University of Hong Kong and scaled very quickly into China, and is now the highest valued AI company in the world. And a couple of other records that the ecosystem here holds, which is, for example, TNG Wallet still holds the highest fintech Series A raise with 150 million that they raised in their Series A round. If we look into ICO, so everybody talks about Telegram, but a few probably know that Block One actually raised twice as much in their ICO, and that's a company that is headquartered in the US as well as here in Hong Kong. And then 2019 was actually a pretty strong year, particularly for fintech. So there were a couple of licenses where the regulators finally opened really up towards the tech ecosystem and allowed, for example, Angel Hub to become the first equity crowdfunding platform here. Also, the insurance authorities had issued 2 virtual insurance licenses, and even more now as we speak already in 2020. And then if we look into the regulator that is regulating the banks here, the banking system, so there were 8 virtual banking licenses that were issued at the beginning of 2020, and some of these companies already went live, and we're really happy to see that actually one of our fintech unicorns, WeLab, also received a virtual banking license. And then a couple of other things, like even if we look into the very first acceleration program in the area of AI, specializing on AI technology, Zeroth.ai, launched here out of Hong Kong, and also the Hashgraph Accelerator Helix. So as Hashgraph, one type of blockchain technology, was actually and decided here to launch from Hong Kong. So with that, very often we get this question, well, why Hong Kong, and what made Hong Kong so successful actually in a relatively short period of time? Because like Hong Kong is really small, and I think that's actually one of the huge advantages of Hong Kong, because it's very, very small. It is very well connected, but B, it is a wonderful testing ground for you to get immediate, market feedback, to understand, learn, measure, pivot potentially, and from there then, have all the great resources available to scale into either Greater Bay Area or, bigger parts of Southeast Asia, or, into China. So a couple of points and highlights that we always typically put forward is it is a really very, very diverse ecosystem. So as I already said, not only by looking at our unicorns, it's not only about fintech. I mean, fintech is obviously one of the very fast-growing subsectors here, but in general, you can see there's a huge diversity, and we would even have interesting verticals such as travel tech, textile tech, prop tech, edu tech, and things that you may not necessarily find in other ecosystems. That is powered by great access to talent, and here once again very, very diversified talent, very international. In general, it holds true that the founders or even the talent in the ecosystem is from all over the world. Actually, 1/3 of unicorn founders are not from Hong Kong, and Sunil mentioned that at the beginning. If you look at me, I'm not originally from Hong Kong, but you can be very easily successful here. And once again, the great access to talent is also true. If we look at the universities that we have, 5 of our top 7 universities are ranked in the top 100 worldwide. MIT set up their only campus outside of the US here in Hong Kong, Chicago booth. There are tons of great access available. And then obviously, once again, I mean, fintech has huge access here also, because we have 75% of the world's banks sitting here in Hong Kong. It's super highly connected. We talked about at the beginning, internet is important. So some people couldn't join today because of internet issues. And well, with that, we're blessed here. We have the infrastructure in place. One of the fastest average peak connection speeds. About 50,000 hotspots. You're connected everywhere. There is huge penetration and usage. So a lot. Number one, smartphone penetration, typically the average rate is like 2.4 smartphones per person here, and they really, really use it. So some interesting stats, if you look into, for example, Facebook as one of the social media, platforms. Hong Kong has 7 times more Facebook friends than the global average user. And the largest Facebook group here in Hong Kong has 3 million people. So you have like half of the population in one Facebook group. Really, really interesting. And once again, what is interesting, you do have here not only the usage of Facebook and Instagram, but also WeChat and things that could already start giving you a bit of a flavor when you then further want to penetrate into China. And William's going to tell you much more about that. Very easy and safe. So typically, before 2019, we really had to explain the concept of one country, 2 systems. I think after Hong Kong got into the news with all the protests, I think people understood that Hong Kong is running under a different regime still, with the rule of law. So very often for people and founders who come from the West, way more familiar with the legal infrastructure, and always very highly ranked in terms of freest economy, IP protection, and that makes it really, really easy. Access to funding, and I know a lot of you are interested here to understand how is the funding environment. The thing is, we are actually seeing, again, more and more traction also in the startup ecosystem in terms of funding and investing. We do definitely already have the highest density of high net worth individuals here, and with Angel Hub, really one of our roles was it to really ensure that capital finds easier access to the ecosystem. But we obviously have active family offices, and I think Sunil asked me the question in one of the prep calls. So what is the type of profile of investors that you have here? Once again, huge diversities from earlier stage VCs that are becoming more popular, and definitely VCs and later stage PEs for sure, CVCs, and typically family offices. And then very interesting for all fintech companies that are on the call, a very sophisticated regulatory environment. It was so sophisticated, I always joke that in the past, actually, they were a little bit hesitant on allowing startups actually to experiment. And they really opened up over the past 2-3 years, starting with the HKMA and then the SFC and the insurance authorities, on bringing sandboxes, contact points, and starting really to issue possibilities for startups to really also operate. So I talked that in the introduction, the virtual banking licenses, etc. Now really allowing startups to be part of the game. And last but not least, very, very strategically positioned for Hong Kong. I mentioned already, it's really a melting pot of East meets West. And if we look into also geographically, that we're sitting in a 5 hours flight radius of half of the world's population, right? Really nicely situated between India and China, and also being able to provide access to the Southeast Asian market is obviously fantastic. So that holds true from a demand side. It obviously holds very strongly true from a supply side. Being so close to China, a lot of international founders still, choose Hong Kong as a base where they settle and look and here explore opportunities to produce in China, particularly in the Pearl River Delta, which is still like the manufacturing powerhouse of the world. And with that, we talk more and more about this concept of the Greater Bay Area, and I really wanted to make sure that I bring that concept a little bit closer to you, because a lot of what we do with WHub is really looking into making cross-border connections possible. And when I get this question from particular people, in Europe or in the West, where they typically were looking more towards the US, and asked me like, what is that, Greater Bay Area? I said, well, if you can imagine to put Silicon Valley, Las Vegas, and New York into one region, that is basically what the Greater Bay Area represents. And it represents that all within a 1-hour reach. So the Greater Bay Area is basically Hong Kong, Shenzhen, Macau, and 8 other cities in the Pearl River Delta area. And it is already the largest Bay Area by population, and is forecasted to very quickly and soon overcome the Tokyo Bay Area, even in terms of GDP. And coming back to my example of New York, Silicon Valley, and Las Vegas in one area. So Hong Kong would be the New York in that example, right? International financial market, the financial market here in Asia, and really, huge innovation and international talent hub. I already highlighted that. And then Shenzhen is really in terms of speed and scalability, really even further ahead. And that innovation hub, obviously I talked about all the fantastic manufacturing capabilities over there, and if we look at it, if you're sitting on top of the world's largest IT market, then you can go from rapid prototyping into mass manufacturing in something like 3 weeks, which typically would take like 3 months in Silicon Valley. So we have feedback from companies that really relocated to Hong Kong or to Shenzhen, even from the US, because they said that this basically goes even way faster. And it's interesting to see that even if we look in terms of IP, 50% of IPs filed in China actually come from that region. And then Macau would be obviously the biggest example in my original example, and that is interesting to know that Macau is a tourism center and gaming and hospitality, and turnover is actually several times bigger than Las Vegas, and it also provides this interesting connection to the Portuguese-speaking business center. But that's just for you a little bit, more to better understand the opportunities there. And I think numbers, once again, just speak for themselves. I typically hate to only talk about the unicorns. It's not only about unicorns, but it gives us somehow an interesting idea how fast and quickly companies can scale. And for that region, 70 million people, already scaling 43 unicorns is pretty impressive, and just again testifies for all the great infrastructure that is there. Some of the names you probably are very familiar with. DGI, it's also a wonderful example of really a company that arguably was created in Hong Kong. At Hong Kong University, Frank developed his flight modos at HKUST, and then went cross-border and set up the company over the years. The world's largest drone manufacturer, and we talked about Sensan. You probably know WeBank, which is part of the Tencent family. Amazing. I'm not going to go too much into detail here because I'm very concerned about time and make sure that you get enough time for detailed Q&A. I just want to invite you, if you want to learn more about the Greater Bay Area, including what each of these cities really has to offer potentially for you. There, grab your copy. It's a free download. It's our white paper, and you can always come back to me and ask for questions or introductions. We ourselves, we're a startup, so we started in 2013 really with this mission and passion, as I mentioned at the beginning, and then took basically one bottleneck after the other for founders to try to understand and make really a difference events. So WHub really started with a jobs board where we help the founders get together, build a team, and from there be able to scale their products. Realized very quickly that we needed to provide visibility and awareness to the scene to draw more resources in and then be able to connect these resources. We did partner with acceleration programs and even executed some of these ourselves. For example, with Techstars, we did a Startup Next, pre-acceleration programs, and as more acceleration programs started flocking into Hong Kong, basically just continued making these connections happen and mentor. And then from there, understood that corporates were really interested how they can benefit from the innovative power of the ecosystem, and Sunil mentioned that. So we built a full program around corporate innovation, open innovation, hackathon challenges, where we see an opportunity to help our startups, get proof of concept opportunities, and at the same time, in a win-win context, also help corporates to, be on the edge and become innovative. And geographical expansion then was obviously the next step, really helping first, our companies scale overseas, and then understanding how we can soft land companies from around the region, and now more and more even globally, to use Hong Kong, the Greater Bay Area, as a launch pad to scale their company. And the very first market actually we went out to was India, with a few programs. And I was personally really, really excited to see the huge opportunity there, and just thought it was really interesting also to provide the visibility to Indian founders that sometimes it might be interesting to actually look into scaling outside of your huge country, because some of these business models might have a wonderful fit actually here in Hong Kong versus, trying to capture the also super diverse and huge, market that you have in your home country. So with that, I'm not going to go too much into details, but we basically structure our services around 3 pillars, really always to showcase the passion, the purpose, the founders, and then connect them to all the resources they need, be it talent, be it co-innovation opportunities with corporates, or, with our international partners, and really empower, right? Having access to resources, to information, to know-how. And later on, I talk a little bit about, the conference and the workshops, and also, pitching competitions that we run that might be resources that could interest you and you could benefit from them. I think what is really important to take away from this chart is the fact that we always put the startup into the center. We're a startup ourselves, and we really set out with this mission on helping startups to scale. And then obviously it is a double-sided play, and it always runs in a win-win program. Now, all that would not be possible if we wouldn't have fantastic partners. And obviously, William is one with SOZ, one of these fantastic partners. And with that, once again, companies scale, but also it comes for companies from a part of the world that just driving ecosystem here. Then we actually our global startup competition. Really wanted to show you this because the first our India final winner, nobody knows the guy is fantastic. Yeah, that was the last time. Yeah, you can, if you have the QR code, just stay second round, obviously, with you, and hopefully I'm back soon. That is part of conference. It's held now, given changed our plans, we posted online in July. If you're looking to opportunities to showcase your stuff, interesting there. And if you want to learn more, white papers, I talk paper, but if you want in particular the fintech, these are all available, and you can stay connected through our media. Fundraising is really an important part of the conversation, and I just want to let you know a little bit that I saw the questions like, are you guys investing into India, and what are your activities, what are you actually doing? So in general, I think you guys are all familiar with what an equity crowdfunding platform really is. I think for us, it's always important to highlight that we're solving the problem of time, access, and know-how, arguably for both, not only for the founders and the startups, but also for the investors. And I would say, even more so for, some of these high net worth individuals who have traditionally here more invested into alternative asset classes, not startup investing, right? I mean, property was a really lucrative investment here, and, a lot of people made money with that, and hence do not necessarily know how to go about startup investing. You can see the photo here, like last year during Startup Impact Summit, we actually invited Jason Calacanis over, one of the most successful angel investors from the US, to really provide classes and workshops for investors to better understand the opportunities. What we're looking for, just for you to know, we look for worldwide companies. So we're sector agnostic, and we're really agnostic in terms of where the companies are coming from. But for what is important for us is these are companies that do have experience in scaling outside of their home market. So we're a super early stage, platform. So we typically take company like pre-A stage. They already have a proven business model in their home market, and they're already having some traction in their expansion. And then we really help them to connect further with the ecosystem here through funding, and then obviously also with WHub in all other areas. With that, we're actually, on the other hand, also for our investors, not only focusing on pre-AA. I think it's probably there where we have the biggest value add for the founders, because that is, I think, the most stressful and the most difficult really period to fundraise, when you're bridging between pure angel investing and institutional capital. But for us, we need to also educate our investors, provide them account adjusted portfolio, where even making smaller tranches of larger rounds on the platform. And being so sector agnostic and so geographically open, argument, how do you guys do that in terms of vetting? And we do have a first audit process online, but really something that becomes very, very hard with a selection committee review and also an investment committee. So we're a highly selected platform, just because, again, being founders ourselves, we really want to make sure that we help founders. And I'm not sure actually if online. Oh no, I'm disconnected.
Hello. William, can you hear me?
Yeah, I can hear you.
I think there's
now I'm gone.
Yeah, there's network problem with Karina's side. So yeah, so I think there is some problem with Karina's network now. I guess so. Let's wait for her network to stabilize. By then, William, you can take up now. We'll open up with Q&A once you're done. Karina, are you back now?
I think I'm back. I can hear you brilliantly well. I'm not sure if you guys can hear me.
Yeah. I think there were some critical issues with the network from your side, because none of us were able to hear, and so I think we should wait for the Q&A now, and we'll pass on the mic to William,
Yeah.
and then
Can you just let me know where I actually broke up?
yeah. So
last four slides.
What?
Yeah, three, four
Last
slides.
four
Yeah.
slides.
Yeah.
The last four slides. Okay. I think maybe I'll just keep that for the Q&A then, in terms of what we're investing in at what stage, because I think that's obviously part where a lot of the founders would like to know. But happy to see that.
Get those questions. You will get the questions to address those 4 slides. Yeah.
Perfect. Fantastic. Cool.
Over to you, William.
Okay, I'm gonna try and share slides here. See what happens.
Yeah.
Maybe. Hold on. Nope. No, don't want to do that.
So are you seeing the share slide option?
Yeah, working on it.
Okay.
Okay, so how's that? You guys see anything?
No, I can still see you, William.
Okay. Yeah. Even I can't see your slides.
Okay. How about now?
Not yet.
Well, no big deal. I can probably, ooh, that's not going to work.
So maybe you can use your slides for your reference, and
yeah, no problem.
Yeah.
Okay.
Yeah.
So great. So thanks a lot. Hopefully you can hear me here. My name is William Baubin. I'm a general partner at SOSV and managing director at China Accelerator and our MOX Accelerator. So just by way of introduction, we are a VC fund. We're a bit different than most VC funds across the world in that we are actually global. So there's a lot of global funds like, say, Sequoia or maybe Lightspeed, but they have different teams covering geographies from China to India, Southeast Asia to the US. Whereas for SOSV, each of our partners, we invest all globally. So I'm investing along with my partner Oscar in companies across the US, Europe, and Asia. So we are not your normal VC. The second thing that's a little bit different about us is that within one fund, SOSV, we invest in, hold on. And I'm back. So yeah, can you hear me? Hopefully. Yeah, good. Okay. Yeah, so we invest through one fund in multiple verticals. So usually a fund, they might focus on internet or they might focus on hardware. For us, within one fund, we've invested in internet and software. Oh man, kicked out again. Hold on. Okay, try one more time. So we invest in internet. Somebody keeps on kicking me out.
As soon as you say the word investing, you get kicked out as well.
So now the problem starts with William, I guess. The network is not there.
No,
William,
so
your
somebody
network
keeps on kicking me out of my link. Can you hear me? Can you hear me
Yeah,
okay?
we can hear you, but the network is
I
not.
was joking, William, saying if you say the word investing, you get kicked out. You know, that seems to be the bad word.
Yeah. No, they don't like me very much. Okay. Well, we can try. Maybe I'll just share this. But you guys can hear me okay? So anyway, so it's internet, hardware, food tech and ag tech, and also biotech. All in one fund, 4 different verticals and global. And the third thing that's a bit different about us is we invest in companies, but then we have them go through one of our 6 accelerator programs. To the startups that we work with is through an accelerator. So we first invest, then we work side by side with the companies for 6 to 9 months, and then we invest again. Most VCs say they're not just about money. We're the same. So the way we help and add value to the companies that we work with is through an accelerator. So we help the companies go from where they are to kind of where they want to go as quickly as possible, i.e. accelerator. So just to give you a general sense of the different platforms. So hacks for hardware. We're the most active investor in hardware in the world, most active in robotics and IoT. So we help companies do Shenzhen. So the headquarters is in Shenzhen there. And then San Francisco is for sales. It's a 9-month plus program. And we continue to work with the companies as long as they want to work with us. For biotech, we have IndieBio San Francisco. And then we just launched, or launching Indie back of a $25 million grant from New York State. So thanks, New York. We started the world's first biotech accelerator. We're the most active investor in the world in biotech and the most active investor in synthetic biology, especially areas like laboratory grown meat or clean meat. So think pork without the pig, beef without the cow, milk without the cow. One of our companies recently did a big $160 million raise called Memphis Meats. We even have duck without the duck. And then the third vertical is food tech and agriculture tech, where we're also the most active investor in the world there. The investments are across hacks for hardware, IndieBio for biotech, but also FoodX out of New York. And then for internet and software, those are the 2 programs that I run along with my partner, Oscar. China Accelerator is the first accelerator program to launch in Asia, 2010. This is our 10th anniversary. And China Accelerator is focused on enterprise, so B2B, and China market entry. And then our second program, MOX, which stands for Mobile Accelerator, is focused on consumer. We're kind of like a startup as well, just like WHub. We help companies, we try and solve problems. For MOX, the big problem that we try and solve is customer acquisition, user acquisition. So we give the companies that we invest in free user acquisition, free app downloads. And on the other side, we also help them make more money. A lot of times people try and make money on ads in consumer internet. That's very difficult because Google and Facebook keep it all. So what we try is help these companies that we invest in add additional ways of making money. And what really monetizes in India, Indonesia, Southeast Asia, and South Asia is generally games, financial services like microloans and insurance, and e-commerce affiliate. People are still paying out pretty good bounties for driving sales into those e-commerce platforms. So we don't think there's any point in paying $1 to make 50 cents. So customer acquisition cost is $1, lifetime value is 50 cents. But with MOX, what we focus on is giving the users for free, for $0. So you make the 50 cents and then you pay out 30% in revenue share. So it's much better to get 50 cents and then pay out 15 or 18 as opposed to paying $1 to make 50 cents. It also helps a lot if you're not giving away your entire company to VCs who, in order to get money to pay for those users. And so we're really focused on helping lower customer acquisition costs, increase lifetime value, and get positive unit economics within consumer. The other program, China Accelerator, again, we're the first accelerator to launch in Asia, as far as I can tell, and 10 years ago. And we're the first and only active accelerator in Asia to have a unicorn go through the program. The unicorn is BitMEX out of Hong Kong. We don't really know what the valuation is, but based on their net income, they probably worth about 5 to 10 billion US dollars. So they're the most valuable startup to come out of Hong Kong. And they're the only company in Asia to come through an accelerator that's still active. They're fall 2015, batch 8, so lucky number 8. And just talking about the kind of companies we look for. So we do cross-border market entry. So you can't really go cross-border unless you have product, unless you have users, unless you have revenue. So we start off with that. 90% of the companies that we work with, that we invest in, already have revenue. 60% have already raised a funding round, usually an angel round or something like that. And then we help with so they're usually about 60% have already raised a funding round. 10 to 20% are actually already break even. So think about if you're a Malaysian startup or even an Indian startup, how do you go cross-border into China? Or how do you go cross-border across Southeast Asia? We're there to help. The companies, in terms of their fundraising goals, 70% of them are trying to raise a $1 to $3 million. Maybe 20% are looking to raise a $4 or $5 million A, and about 10% are looking to raise a 500K angel. I'll give you a general sense. The vast majority of the companies that we work with are already doing US dollars net revenue of 10 to 20K US, $10,000 to $20,000. Some of the companies are doing 40 to 50K. Maybe 1 in 10 are doing, $70, $80, $100,000 in monthly net revenue before they come into our program. And again, we're working with companies that are doing pretty well in their home market, and we're helping them expand, not just in their home market, but across the region. On the enterprise side, talking a little bit about China, most of our China Accelerator companies are enterprise. We used to be very heavy on consumer, but now we're about 80% enterprise within China Accelerator. A third of our China Accelerator companies don't have anything to do with China. They're enterprise companies that we're helping scale up. One of the biggest things that we help with is customer acquisition, client acquisition. So we work with companies that are post-product market fit. They have customers that are paying, but they're not that big yet. And what do we help them do? Well, we help them sell into large multinationals. So we're engaged with over 200 Fortune 1000 companies. 24 of those large multinationals have invested in our fund. We run innovation programs for 5 of the top 10 consumer products companies in the world. Unilever, J&J. I'm on the APAC board of advisors for AB InBev, and they're an investor in our fund, the largest beer company in the world. Nestle, and the number 2 consumer goods products in the world that we can't talk about. We also run innovation in the last year for companies like HSBC, Sanofi, AXA, MetLife on the fintech side, and the drug side. And then we're very happy to be currently working with one of the top 2 or 3 athletic footwear brands in the world that we also cannot talk about. On the media side, we're strategic partners with Universal Music, the #1 record label in the world. So what is the special thing about China? Well, it's a great way to break into the Global 1000. Large corporations are under such huge pressure in China. They're getting their butts kicked by the locals who have more money and who move faster. So they're actually willing to work with startups, pull in external innovation from startups, and for paid pilots and then commercial agreements. So we call it like the China backdoor. So what's the best way to get into a Fortune 100 or Fortune 500 company? Is to get in through China, get a paid pilot, convert to a commercial within China, and then from there expand out. We've done this with many companies and startups, and we've run 25 accelerator programs for these large corporates, and they're not focused on making us money. They're actually focused on driving a win-win relationship between the startups and the corporates. So if you're on the corporate side, please reach out. We're happy to run one of these programs with you. And please note that 90% plus of the startups that we bring into these corporates for these $20,000 paid pilots are not our portfolio. The reason why the corporates work with us is we are the number 2 most active seed and angel stage investor in the world. We have almost 1,000 portfolio companies. We're investing 150 companies a year. And right now, doing about 45 company investments a year for internet and software. So just getting to a couple case studies. So I started investing in Indian internet in 2005. When I was a sell-side equity research analyst with Deutsche Bank. Not only in China did I work on the first Alibaba IPO, but also the Kingsoft IPO, where the head of engineering was Lei Jin, who later went on to found Xiaomi, which is now the number 1 in India. But I also was one of the first internet investors into India. Companies we worked with include Rediff, if you remember Rediff.com, Naukri, one of the first job boards, and also on mobile, where we invested, took an IPO, went to a unicorn level, I think on the NASDAQ before the smartphone came out and killed it. So we started investing again, or I started investing again in India about 4 years ago, with the idea of helping Indian companies go global, not to the US, but to the rest of Asia. And so we dipped our toe in, did 1 or 2 deals starting in 2016, 2017. And as you know, 3 things happened, right? It became a lot easier to make a payment. Demonetization, and also the short code payment came out. Geo happened, so everybody got free internet, and Androids that cost about $50 actually worked. So you got a huge sea change. And having been in China since 2002, it's like I saw the movie again. I've seen this movie before. This is a rerun. So of course, India is not the same as China. But India, about 2.5, 3 years ago, started to really open up. And so, we went in, we started investing pretty heavily. So at SOSV, we've invested in 28 companies in India in the last 1.5 years, 2 years, well, 4 years, but just in the last 2 years, 26 companies. I've done 25 investments in India, and I think like 16, 17 last year, and already 8 deals, 7 or 8 deals this year. So we're a top 10 most active VC in India. We're also number 8 most active VC in Southeast Asia. So I've sort of given a bit of context and how we help. So one company I'd like to call out is Kutlu. So in China, we have Taobao, which is sort of C2C, and then we have Tmall, which is brand store. So Tmall, is a lot like Flipkart, or it's a lot like Paytm Mall. It's brand stores, big guys. But eBay got shut down in India. And so there is no Taobao of India. So the idea is to invest in a Taobao of India. But there's a lot of guys out there like Misho who are flogging their own product, trying to push their own product. But that's not Taobao. So what Kutlu is very much like Taobao, where people, mom and pops, regular people selling out of their apartments can start their, can earn a living by selling to their friends or selling whatever products they want, not some product that comes from somebody. Now, the cool thing is we bring the China connection. So if you're familiar with like Paytm, or a lot of this stuff comes out of China cross border. But we have direct relationships with all the factories that are selling on Taobao. And the funny thing is the Taobao price is half the Paytm, Lazada, cross-border Alibaba Express price. So we're bringing product from China through Kootlu into India at a fraction of the price, and helping the mom and pops make a living and make sure that Google, Facebook, Amazon, and 5 big Chinese guys don't take over the internet. So that's kind of the story with Mops and Kootlu. Another company on the B2B side we invested in India is called Try and Buy. They're a pure tech solution, and they've rolled out and they got customers like Jabong in India. But one of the biggest problems outside of India is really returns. Returns are a huge killer. And if you can cut returns with Try and Buy is like fitting room solution, e-fitting room solution, you can save a huge amount of money as an e-commerce platform. Now, the problem is that most fitting room software, machine vision software that allows you to try on the clothes before you buy makes you look like shit. So Amazon solution sucks, Microsoft solution sucks, pretty much everybody's solution sucks. And this is the first solution that I've seen that actually makes the consumer look okay while giving a sense of fit. So we invested and we started introducing the company to a couple of players in China and across the world, and they're really starting to get some traction. In fact, last year when Jeff Bezos came to India, he awarded them Innovator of the Year at some awards where he's trying not to get shut down by the Indian government. So with that, I'm going to stop. I think you guys probably have a lot of questions. So thanks a lot for the time. And hopefully Karina's connection is working out okay. Yeah.
I think the most unstable network today is with Karina.
Yeah, Hong Kong, bad internet. I'm using a VPN. But I don't know if there's a bunch of questions here. We can go into questions if you want.
Yeah. So William, the very first question would be, people would love to understand how do startups reach out to SOSV, and what you as a SOSV fund look look in a startup before making a decision.
Okay, so the easiest way to get us, so Naman is a director of India, and he's in the chat here. NAMA, Naman, why don't you type something in there? And so just get in touch with him. And he's based in Delhi NC or Gurgaon. Last time I checked, is somewhere in Delhi. And then Lace is also online from Mops. And so the other thing is we have a lot of mentors. Reach out to mentors, or you can just email me. Although you have to understand that I don't read my own email. Somebody else does. So if you email me, there's my email address. You might not get an answer, so just keep on pinging me. But the easiest way to do it is through Naman. Okay. And then what do we look for? So as early stage investors, we don't want the big guys to control the internet, right? So one of the questions I saw was, how do we give free users? Well, that's a very good question. So if you have Google, Facebook, and Amazon on one side, and I guess now Geo, and then you got like Xiaomi and a bunch of Chinese guys on the other side, and then you've got SoftBank Vision Fund companies around here. Entrepreneurs are stuck in the middle, and they're getting squashed like bugs. Yeah. So who are they squashing? Well, these guys are all squashing the startups, but who else are they squashing? They're killing the media companies. They're killing the other telcos. They're killing the banks. They're killing the retail chains, the shopping malls, the brands. Why do you think we're working with 5 of the top 10 largest consumer products companies in the world? Because they're getting pressure. So what do? We partner with them. So any of these companies, whether it be a bank or a telco or a shopping mall or a retail outlet, they have users and they have trust. The problem is they don't have an internet revenue model. So we invest in companies that can benefit from free user acquisition from the banks, from the telcos, from the cell phone brands. We get free user acquisition from them. But our startups in return gives 30% of net revenue, all revenue streams feeding back in. So we allow the local banks, the local telcos, the local shopping malls, the local brands to fight back against the big guys who are taking over. The second group that we partner with are mom and pop shops. So mom and pop shops are going to get crushed. I mean, COVID has been horrible for mom and pop shops. So we're giving the weapons, the products, and the software to these mom and pop shops who have a network they have users and they have trust. And we're giving them weapons to fight back. And in return for promoting our Mox apps, they all get revenue share, recurring revenue share, 30% of net revenue lifetime, all revenue streams. Now, the problem is ads don't make money because of Google and Facebook. So the third leg of the stool is e-commerce, affiliate, from Kootloot and others. We're doing financial services, microloans, and insurance. And of course, games is not that big in India, but we're trying to change that. And that's really where the money is. And so we're not a super app ourselves. Think about it like a decentralized ecosystem of companies that work together to help each other survive. So how do you get free users? Well, you get free promotion for other companies in return for a share of revenue. So instead of paying $1 to make 50 cents, again, you're paying 50 cents. And then after you make the 50 cents, you give away 17. We think that's a much better model. So we've been 5 years at this. The first couple of years were a total mess, but we're now up to 86 million Mox users in India and 30 million monthly active in Indonesia, and we're starting to grow up. And just for example, in Vietnam, one of our partners is the #1 online media in Vietnam. So Vietnam's got about 90 million users, right? They have 10 million DAU and over 30 million MAU. So over a third of the population of Vietnam uses their platform every month. And these guys are dying because they don't have a revenue model. So now they're promoting the Mox app. So for our Indian apps, they work well in India. They're probably going to work well in Vietnam. And we're helping companies from India expand out.
Okay. Okay. So, William, you have been working, you have been in China for a long time, and you have been investing in startups in Southeast Asia. Now, China as such is a bit ahead of us because of in the COVID crisis situation. The founders have already gone through that situation. Many of the startups have collapsed. Many of them have emerged as even more stronger after this situation. So what suggestion would you give to the Indian founders on this particular front? What learnings can we have from that ecosystem from your perspective?
So I'll just tell you what we've been doing with our Indian founders. So, it was funny being in China, talking to the 25 CEOs and founding teams in India that we've invested in over the last couple of years. It's like we were speaking from the future, into India. So every one of our portfolio companies had a head start. We knew what was coming and we knew how to prepare. And we had tips, tricks, and hacks on how to turn something that's actually pretty bad into an advantage. So one of our companies, Supply Note. Supply Note is a B2B play where they work with restaurants on the one side and like the food brands on the other. And they help these restaurants scale up. And the minute a restaurant goes on the Supply Note platform, their profit share, their profits, there's just like the money that they make goes up 70% because we cut their costs. It's like, think about it like a group buy. Instead of the restaurants buying little bits of pieces here and there, spices and rice and millet or whatever, we group them together. And so they pay a lot less and immediately they make more money. Now, the problem with COVID is all the restaurants were closing in India. But we knew this already from China. Everybody had been locked in their apartments for a month. In China, you don't screw around with the police. They have sticks too, right? So what did we do? Well, just because you're locked in your apartment doesn't mean you don't eat, right? So you can't eat at the restaurant, but you have to get food delivery. So we immediately kind of got them calling up all the food delivery companies and the food companies and helping them with the supply. So we have a huge flood of local grocers. I wouldn't say supermarkets, but the local mom and pop and small supermarkets all over, and we're supplying them because they're just running out of food, especially the ones in the buildings. Now, are we going to long term be a B2B from the food brands all the way down to the supermarkets? We don't know, but for now. We're doing great business. We went down to zero. Now we're going up, the fastest growth I've ever seen, and we're already at 20% of the peak before. And so the ability to have like the tips, tricks, and hacks, not just for COVID, but for business in general. I mean, when you're fighting Chinese entrepreneurs or Chinese-backed company, where it's like an Indian founder but Chinese tech and Chinese money. You need somebody on your side. So that's what we're trying to bring down to the Indian founders is, not just capital, because we don't actually invest very much. You can check the chat, but cash is a little over 100K. But what we really try and help with is the tools to survive in an increasingly competitive market.
Okay. So I'll give you a 2-minute break now. So is Karina, can you hear us?
I don't know. You there? Maybe you should just kill your video. Maybe would it help if I killed my video? I don't know.
Okay, so it looks like Karina is...
Well, at least she got her speech through her speech before the thing died. Yeah.
No problem. We'll take the next question to direct the next question to you again, Williams. So, interestingly, after a drop in the fundings, we saw the last week of China saw the highest number of fundings happening in last 1 year. You think it's a rebound, or the founders have emerged even stronger after this crisis?
So are you talking about the March April pop?
Yeah.
Yeah. So I mean, all these deals were actually negotiated before the Chinese New Year's. So everything was already happening, and then the VC has a choice. They can either, cancel the deal, they can do the deal, or they can renegotiate the deal. In some cases, you saw a little bit of a renegotiation. But no, we have companies that they've been working on closing these deals, mostly mid-stage, late stage for quite a while. And then it's just because of the COVID lockdown, they didn't quite get closed. They didn't get closed before Chinese New Year's, so now they're getting closed. So we've been in a VC winter in China since September 2018, and so but there's still a lot of money. Now VCs are still funded, but the question is, first things first. They focus on their existing portfolio, and they're playing COVID doctor with a limited number of respirators, right? So you've got 20 portfolio companies and 10 respirators, and you've got to figure out who's okay, who's probably going to die. And there's this bunch in the middle where you can, if you give them a respirator, they'll live. But if you don't give them the respirator, they'll die. So that's what's going on right now. A lot of companies across the region. Now in China, luckily, or not luckily, but the COVID happened during a vacation time. And it's just like the vacation got extended. So most of the deliveries were all done before Lunar New Year. And then everybody expected China to shut down for 2 weeks. Well, instead of 2 weeks, it shut down for 5 weeks. But everybody was with their family, and so this is a natural downtime for China. What we all need to be very aware of, though, is not just the COVID, but the recession that's coming. Shipments from China to the U.S. are already down 50%. The expectation from our side is that they will fall another 50%. So shipping traffic down 75%, if my math is correct. VCs and math, right? But it could be, we're in for a pretty tough time. When the U.S. gets a cold, everybody sneezes. Well, the U.S. has COVID, and the global economy is in trouble. So we need to be aware of this and prepare.
So this actually brings us to another question that now cash in hand is the biggest thing for now, at least till
Yeah.
this this COVID thing continues. Cash in hand is going to be a very crucial factor for the startup, and there are certain tools to maintain that cash. One of the prominent tool is to to fire people who are not not you know to cut down on the teams. Now it's a two-edged sword, I believe. Once this thing starts stabilizing, you will grow and you'll have to hire people, and then the problem again may come up in terms of whether you are
Yeah.
able to get similar resources or not. So how do founders tackle this situation? Salary cuts, firing are definitely the option, but do you have any learnings from any other ecosystem that you would like to share with us?
Yeah, so I mean, I didn't come up with this, but I've been through. I started investing in 1996. So we had the Asian crisis in '97. I got laid off in the dot-com bubble of 2000. I was in Taiwan working at Deutsche Bank, SARS for 2003. Then we had the 2008 Great Recession or Depression or whatever. And my first startup died during that thing. And then we've had a kind of a recovery since then, but we've had the China VC winter, for the last basically year and a half before we hit COVID. So the first thing is that the only thing you can control is your cash. Okay, so you got to be careful with your cash. You can't control your receivables. You can't control your revenue. You can only control your cash. So figure out, kind of a runway, and usually 12 months plus if you can do it, and figure out what that's going to take. And basically, so as a lot of people say, survival is winning. So if you survive through this, then you've won. Because everybody else is dead. The weak ones are all going to die off. So figure out, what that cash is. And the great thing, and it's not great. It's just like the great thing about having us along is you got to rip off the Band-Aid right away. So if you've got $100,000 in the bank and you're spending 20K, that's 5 months, right? But if what you need is 10K to live. Well, you need to get rid of people now, so that you can have that 8-10 month runway. But if you keep on spending 20K instead of 10K, then your 10-month runway turns into a 7-month runway or a 6-month runway. So you need to pull off the Band-Aid, take the pain. Okay, and there's plenty of blog posts out there on how to do it. Now, in a lot of places around the world, there's like the bosses and then there's like the employees. But during the downturn, there's no difference. It becomes like one team because everybody's making a sacrifice. And you got to kind of lead from the top so the people at the top make a sacrifice. And you basically have to figure out who you're going to keep and how much they need to live on. And so usually, when you're lowering people's salaries, or people stop taking salaries, you want to compensate them with stock. We haven't seen that so much in India, but we encourage people who stick by the company to not just be employees but also team members. So if people are taking a pay cut, we encourage our companies to give them a little stock options just so that they get a little bonus if they stick for the company for the next, we're early stage. So, they're not going to see anything unless they stay with the company for the next 5, 6, 7 years. But really, yeah. I don't know, getting some background noise, but so that's the second thing. So rip the Band-Aid, make the layoffs quick, reward the people that are gonna stick with you, and then if we're seeing 25 to 35% valuation decreases in the U.S. That's what people are thinking. For us as an entrepreneur, you want to control your valuation decrease. So it's better for you to suggest it than to have the VC suggest it. Okay, so take control of that and try and drive the process as much as possible. So in 2008, I laid off my small 8-person team and shut down my startup and had to explain to my friends and family, why I lost all their money. It goes beyond painful. But if you come through this, you're like a military unit that was under fire. And everybody knows that VC investments made during a downturn always return the most. So this is where the VCs earn their income and their profit share. And this is where we separate the wannabe entrepreneurs from the real deal.
Yeah. So there's a question from one of the audience side. If Google and Facebook were ad-driven models and China is commerce and micropayment-driven models, what new models do you see coming up in India?
Well, I mean, when you've got Google and Facebook controlling 85% of the ad market, they control the market. Why do you think they have such a big market cap? Because they pay out shit and they charge a lot, right? We're partnering with guys like Times of India. They're a major media company. They have a similar strategy to folks like maybe Geo, where they don't want to get taken over. And what's the best way to not get taken over? Well, you diversify into multiple areas, and you start making money in the way that the customer wants to pay. And so we think that the Xiaomi model works, right? Times of India has a good model. Geo seems to have a good model. We started partnering with companies like Micromax, Intex, Carbon, Panasonic 4 or 5 years ago when we were Mox. And when we met with them, and we had good relationships with them, they were 50% market share in the Indian smartphone market. And I said, hey, listen, if you don't get a business model, like a real business model, not just a hardware business model, you're dead. They didn't listen. And they went from 50% market share down to 4%. And now they're gone. They're selling white goods and washing machines and whatnot. And who's going to be able to beat Chinese players in selling washing machines? So good luck with that. So I think that people have seen what happens when you're playing by last decade's rules, and because technology crosses borders very easily. The Indian government is trying to block Chinese money from coming into India. Good luck with that. I mean, we're a U.S. fund, and we're we're American. We don't have any Chinese money, but we saw it's impossible to block money. Good luck with So I mean, it's a nice thought, but we'll see what happens there. But I think the bottom line though is during a downturn, really focus on must-have. Okay. People don't buy nice to have during a downturn. They have to buy must have. And if your product or service is not must have, then you need to find another product or service. So like during COVID, restaurants, that's not even nice to have. That's not available. But what Supply Note did is they started to buy something that people really need to eat, rice, lentil, vegetable. People are not going to starve to death. And we did that very quickly, like 4 or 5 weeks ago. Bang! As soon as we got our licenses, our truck licenses, we weren't delivering to restaurants because they were all closed. Delivering to supermarkets, or local grocery stores, local mom and pops.
So for William Bowbeen, how does investing in an Indian startup different from investing in a startup which is based out of say Indonesia or Malaysia?
Well, everybody's got a different accent. So I have an American accent, we got an Indian accent, and then we got Indonesian accents. Really not too different. I mean, we're working with companies who have apps that have a 30-day retention over 15%. And so these are apps that people love, but nobody, they can't raise money because nobody's willing to back a company that spends $1 to make 50 cents. Most VCs can do math. You'd be very surprised, but most of them don't understand basic unit economics. So, but these are people that have customers that love them. And for a lot of mobile internet startups, like where are the only people actively investing? Like how many companies do you see raising money for an app recently? Not too many, especially in the early stage. So our goal is to accelerate, to get from here to here, and through that glass ceiling. And so profitability, most of our companies hit profitability, then they fundraise. So we've done pretty well, and we're very happy with our partners in the Indian startups. So I would say there's what makes an entrepreneur strong. Well, we call them cockroaches. So a cockroach, you step on them, they might lose a couple legs, but they keep on going. And right now during COVID, I mean, we're in a shitstorm. Things are really bad. And the funny thing about cockroaches is they're the only people or the only things on earth that can eat shit and turn it into something useful, fertilizer. So we're all kind of in cockroach mode right now, hoping to survive what's going to be a pretty tough time. And so we don't always invest in the smoothest talkers in the world. I have no idea where half the companies were actually physically located when we invested. I don't use the products because I am not the target demographic. I just look at the data. But one thing that you can, all the SOSV, Mox and China Accelerators entrepreneurs share is a passion that allows them to eat shit and turn it into something useful.
Thanks, William. I'll have just one last question to Karina if she's there, or we'll wind up. Karina, are you there?
Maybe I'll shut my video off. Would that help? I don't know.
No, that's done. That's not a problem.
Oh wait. No. I don't know.
I mean, I didn't know that the internet situation is so bad in Hong Kong.
Yeah, it's I think she's in the office, so it might be her office connection. I was talking to the other day on our call, and it can be tough. I'm on a pretty hardcore VPN here in China, so far so good.
I'm getting the network strength for her, and it is showing it's very bad there. So yeah. Okay, thanks. Yeah. So I think we should wind up now. We have already exceeded by I think we compensated for the initial 10-minute delay. And
yeah, sorry about that. That was my fault. I couldn't figure out how to get into this room.
Absolutely fine. It's a new platform. Thank you so much, William, for joining us. Yeah. So internet was definitely a mess today, but somehow we made it happen. Thank you. And would you mind sharing one last thought with the Indian founders? Going through this current crisis, do you want to share one last thought with them?
Yeah, sure. So I mean, this has nothing really to do with COVID or anything like that. But your investors are not just about money, right? So when things are tough, a lot of people say, oh, I should just ask them for money, give me money, save me, right? But where you figure out which are the really good investors is, ask them more for advice. Take them through the process, take them through their thought process, existing and new investors, potential investors, but especially your existing investors. Because a lot of VCs, when shit goes down, they basically go on vacation. They don't really care. They're living off their management fees anyway. But you can tell the good ones because they're right in there with you. And so, most VCs right now, they might not be making new investments. And the reason why is they're not on vacation. They're out there working with their portfolio companies, helping them make the cuts, helping them build new models, helping them with fundraising. So just like when you meet a VC, you're always pitching them. But just remember that there's a people think there's a lot of startups, okay, and few VCs. The funny thing is that there's a lot of VCs, and there's very few good startups. So you want to you want to work with startup funders, VCs that are in there side by side with their companies, especially when things are bad. And so that's where VCs earn their living. And we're on a 10 to 15, we're on a 13-year cycle. So for us, this is kind of a bit of a blip. But for founders, it's their life, it's their family, it's their life savings. It's not a freaking blip. And so the look for VCs that actually care and are willing to get down in the dirt with you.
Thank you, William. Thank you so much.
Thanks a lot. Thanks for the opportunity. I'm glad Karina got to go first before the internet died.
Unfortunately, we had to drop Karina in this last Q&A session, but
Yeah.
I'm glad you joined us. Thank you so much, and thank you so much, audience. Please take care, stay safe, stay inside your houses, and see you soon. Thank you.
Thanks, guys. Thanks. Cheers.
Yes.
Cheers. Bye-bye.